Neeraj Gambhir, Managing Director and Head of Fixed Income Group with Nomura Capital, joins us live now. Neeraj, good morning. Thank you for joining us. Neeraj, it's a virtual bloodbath out there for the Indian currency, which surely is having an impact on the bond market as the bond yields really have shot up.
Yeah, so, driven by the currency, the bond yields are up about 10 basis points, between 8 to 10 basis points across the curve. And actually in the morning, there hasn't been too much of trading volume that has happened. But, from the initial trades, what we've seen so far, about 10 odd basis points in the 10-year bond.
Neeraj, do you see the central bank actually stepping in? And more importantly, what tools do they have at their hands at a time of global uncertainty and volatility to help arrest the rupee fall?
See, as far as their capabilities of being able to intervene in the market and, stem it is concerned, I think that's quite a lot. Both on the administrative side as well as the reserves. But the question is, do they want to? So far, it's been a pretty generic dollar move across Asia and also across other major currencies. So I don't see any point in actually stepping in at this point in time and trying to stem the rout. You got to wait for the global currency markets to stabilize and then see, if there is any excessive speculative interest in rupee and then whether we want to control it. So I don't see at this point in time Reserve Bank, spending too much of ammunition to control the depreciation.
Well, never go against the mob, because if you go against the mob clearly is going to rob you. Neeraj, a view which is gaining consensus on the street is that Reserve Bank of India actually could consider increasing rates. Do you think bond markets are pricing in that move?
I think where we are currently in both bond and the swap markets is that we are kind of taking out the forward projections of rate decreases rather than pricing in rate increases. I think the market is still some time away from pricing in any kind of rate increase, and I think the rate increases per se are still some time away simply because, our economic growth numbers are actually very weak. So I'm not sure what are you going to gain by just increasing the rates at this point in time. What you could potentially have is some kind of a liquidity squeeze, and just to make sure that the speculative interest on rupee sort of stays minimal. But I think even that, is some time away, unless and until we see a complete runaway sort of move on the rupee, which is outside and away from what's happening in the regional currencies. I don't expect that to happen right now. So I think the market is just given up on any hopes for future rate cuts or substantial, change in the directionality of monetary policy.
Right, Neeraj, appreciate your time and thank you for joining us.